Hey, what's going on, guys? Neil here bringing you a brand new video. Hope everyone's having a fantastic day. Today I just wanted to bring you a short video on the battle for zero trading fees that's going on right now. This just started about a few days ago, and a bunch of different brokers are starting to offer free trades, so I thought I'd make a quick video on it and tell you my viewpoint and kind of just the facts behind it. So I got this CNBC article pulled up titled Battle for Zero Trading Fees Threatens Robinhood's Biggest Model and Next Leg of Growth. So basically, they're talking about Robinhood's been around for 6 years, and major brokers are just catching up with the wave of fee eliminating announcements this week. Charles Schwab, whatever, low costs. Their business model now is in serious jeopardy, right? So there's a few things we're going to talk about with Robinhood, Charles Schwab, TD Ameritrade. So basically, Charles Schwab, TD Ameritrade, and E-Trade all announced this week they would no longer charge for individual stocks, ETFs, and option trades. Analysts say that the announcements threaten Robinhood's ability to differentiate and puts pressure on the startup to expand more deeply into financial services. So basically, they're saying that E-Trade and TD Ameritrade and Charles Schwab's are more traditional brokers, and they have more tools available to you, and it's going to threaten Robinhood's ability in the future. So I don't know how I agree with that. We'll talk about that at the end there, but it's interesting to think about. So this no-fee model has resulted in eye-popping growth at Robinhood. The startup hit 6 million users last year and has notched a 7.6 billion valuation from its venture capital backers. Robinhood was personally one of the platforms I started using when I first traded, so it's something I would recommend to you guys. It's really user-friendly, it's mobile, it's really easy to use, and it's offered free trades for 6 years now. So Robinhood's customers average around age 32 and are often first-time investors drawn to sleek user experience and lower prices. So let's just talk about the bargain hunters. But basically, we're talking about Charles Schwab. Those millennials also have a higher net worth on average. The retail household for those new clients has roughly $350,000 in assets, which is not bad. And you have to think about when millennials are going to get more buying power. That's what these companies want, these brokers. They want the young audience to stick with them for a long time, right? So let's talk about bargain hunters here. Basically, what that means is it's just market competition, and I'm a big fan of market competition. It drives prices down and quality up, right? But the problem with this is, it's really affecting the stock prices, and this is why I'm not an investor in any banks right now, and I never really have been, because there's so many other better investments that you can make, in my opinion. So TD Ameritrade generates 28% of revenue from commissions, and Charles Schwab only generates 8%. That's huge, guys. That's a lot. Even 8% is a lot, right? So shares of major brokerage firms plummeted this week. We saw Schwab was down 15%, TD was down 30%, E-Trade down 17%. I mean, these are massive numbers in the stock market here for traditional equity markets, and a bank being at that. So something to really think about. And when earnings come out too, you have to think about that. These commissions are going to be down, so this is just a reaction, right? And maybe they'll, get bought back up a little bit, but then if their earnings are bad, that's going to be, poor. That's definitely not going to be good. This definitely might have been an overreaction, though, is what they're saying. Poor judgment on the people thinking it's bad. I think it's good. Like I said, free trades for everyone. So then let's talk about the last thing, Robinhood's next move and how it could affect them. Right? So the company has told CNBC it plans to be a full-scale financial institution, and that 5-10 years from now, you should be able to open up Robinhood and get anything you could by walking into your local Bank of America with a better customer experience and better pricing. And I'm a big believer in that. I think they are pushing forward with technology and the growth in the financial industry, and eventually they could get to that level, but they're definitely very far away from that. But they just talk about how they plan to IPO, but they didn't say when, so that should be interesting as well. Basically, there's no signs of them slowing down. This company's on a tear. They're not bleeding customers. So their customer growth is huge, and this is key right here. They're getting customers who like a good, clean experience and mobile first. I don't think they're going to lose customers to the incumbents. They're going to start emphasizing other products and going deeper into that. So they're going to look for other sources of revenue. And so is TD, and so is Charles Schwab and E-Trade, right? So what am I thinking about at the end here? I personally use TD Ameritrade and Robinhood right now. Like I said, I started on Robinhood. I just recently made a trade to Robinhood, transfer, sorry. A pretty large one at that, because I was thinking, oh, it's kind of nice to have it on my phone, and when I'm able to travel, and there's free trades, even though I've already talked down TD Ameritrade. But TD Ameritrade, if you're really serious about trading, has a software called Thinkorswim, which I highly recommend you download. So that will help you a lot. So I'm actually about to make a transfer back, and this was just about a month ago, to TD Ameritrade, but I'm going to still keep money in Robinhood as well because it is really convenient, and their app is more user-friendly. It might not have as many tools even as TD Ameritrade, but their app is really user-friendly. These traditional brokers, I think if they kind of put more time into the development of, how their website looks, their app, how user-friendly everything is, then they'll be able to take off a little bit. And I still think Robinhood's going to be fine. If you're a trader, the biggest thing to think about is what your fills are going to be like. So when they're sending the orders to the market, if they're doing it at a favorable price to them, where you're missing out on 1 penny to 5 pennies per trade, that's going to add up a lot over time, right? If you're a high frequency trader. So definitely something to think about, guys. Let's look at some quick charts as well. I'm definitely going to be interested in watching Robinhood and what happens. And if you guys have any questions about that, leave a comment below and let me know what broker you're going to be using moving forward. So here we have the charts here pulled up of Bitcoin. We can pull it out to 4 hours, right? So I have some different levels drawn out here. If you want to zoom in here, this is what I'm really looking at. This support holding at 7,700. I have alerts set for there. And then on top of that, we're looking to move higher towards, if we can break above here, 8,500, then there's really not much resistance moving upwards here. So definitely could be a big uptick. Watch for some big plays in altcoins. If you guys want to know more about that, let me know, and I'll make a video specifically on altcoins. But it's definitely something I'd keep an eye on. We're looking at a pretty big discount. But if you would have bought at the beginning of the year, it's still been the best investment compared to traditional equity markets or really anything out there. So keep an eye on it. Still, SPY is pretty high for me at these levels, right? If you want to look at these indicators even, and just not even the indicators, mostly the fundamentals, right? We're really overvalued here. It's been a while now that we're moving sideways, right? And with all this political instability and the trade wars, that really doesn't help at all. So, and another big thing to think about is we're cash poor. So this latest survey shows that investors in September reduced their cash cushion by quite a bit. They're now holding only 14.6 of their portfolios in liquid instruments, among the lowest in 30 years. So that's cash poor. It's really not good that we're cash poor. This is looking at the same time when we were back in 2008, right? We weren't all the way down here, but this is looking bad, right? If people don't have cash on hand, it's not going to be good, right, when something like this happens. So that's why I always tell people a dollar cost average in and always have cash on hand. Like I said, these markets are just not looking, good to me, and I have no interest in investing them when some of my altcoin positions are, outpacing these traditional markets by 10x, So it really just doesn't make sense for me at these levels. I'm still trading stocks, but I'm not adding to any positions at this point. Hey everyone, I forgot to record an outro, but it'd be greatly appreciated if you made it this far in the video to like, comment, subscribe, and share this video with your friends. It really helps out with the YouTube algorithm and helps other people see it. If you guys want to follow me on Instagram, check it out at N2S_capital. I've been putting out a lot of good content on my story there. And then if you guys aren't already following me on Twitch, that's twitch.tv/N2SPlays. I've been streaming there every single day, and I'm grinding for a partner right now, so that'd be greatly appreciated as well. And if you haven't already, join my Discord community as well. We're 220 members strong. I got a lot of good education here, and this is the best way to contact me by far. So I appreciate all the support. I hope everyone has an amazing day. Peace.